Good morning, all. This is Fatty Hemsey. It's about 8:28 a.m. on Thursday, 17th of September, 2020. Was here a little bit earlier. I had ordered some extra food for my change of diet, and on Amazon it says preference. I said 6 to 8. I figured it'll show up around 8. 6:01 over here. So go buy some Amazon stuff on a dip. Okay, so that was amazing. So when I was up here to check everything else, then I was watching some news and kind of got too relaxed. My bad. We should start these earlier. We added a chart last night to the Skype presentation that is broadcasted. So you have OTF fractal and a surprise. We're gonna get that shortly. But first, we're gonna go through what we gotta go through. Econ data. You notice that Jay Powell really messed up this market. He went back to his series of having the negative days because he was a while. He was the voice of reason, voice of logic and finance, and above the political foray. Well, he stated that yesterday, but he also had a lot of very poor answers, as documented and analyzed by zillions of the financial journals out there. So we had a drop. We're starting a drop now. There's some issues on the Boeing, I understand, with Southwest, and there's one more name that is down. I forgot, but it was on CNBC a little bit earlier. But now, and net result is we're down. We're down about 240 on the NAS right now, NAS futures. The NQ, the Z contract, obviously, and on ES, I'm looking at another screen here. Where's my matrix? The later screen here. Okay. On ES, we're also down 50, so it's difficult. Okay, no, actually, let's correct that. 262 negative on NAS and 50 on ES. Again, technology are taking the brunt here. Because you got to look at percentages. 2.2% on NAS, 1.5% on ES. Okay. Jobless data must have just come in. Jobless claims. I don't have the TV on, but it looks like it came at 860. So we have the same run rate we've been the last 3 weeks. Is it last 3 weeks? Yeah, I think so. Last 3 weeks. Around this 880 number. Okay. So still, we have initial jobless claims that are just mind-boggling. What else do we have to worry about? EIA, I'm not worried about that. Philly Fed must have come in. Oh, housing. Let's look at housing quickly. Yeah, there's housing and auto. That's what runs the economy. Below consensus attack, both numbers. So that's not good either. That's not helping this downtick. Yeah. All right. And Philly Fed. Let's see what we got there. Come on, Yak. Okay. Also a tad below. 15.5 was the consensus. And this we were warned yesterday. We talked about that. So at 15, yeah. It's downticking a little bit because the economy is not as rosy as they say it is. Okay. We still have 12 million unemployed. According to the Chairman Fed. I'm sorry, Fed Chair Powell. I would think he's had good data. Tomorrow we have consumer, remember, there's a trip quad witching, broadly speaking. You got LEIs, you got consumer confidence sentiment. I don't care about the current account, that's black too. I really look at reds. Occasionally a few greens, that's it. Always pay attention to what the Fed officials are saying. And that's why, for that, by the way, you can get the email. They'll send it to you. So that just in case you don't have enough to read, there's another 2-3 pages of pure for insomnia in your inbox. All right, let's get to charts here, please. We're going to go to timer. Good. This is not good. We are flat. The slope is changing on the central line, and we're failing at the center line. I may have to get short here, depending how we close here. Now, if you get a little bit oversold, not too much, history shows us that it will bounce back into tomorrow because of his expiration. Yeah, because by then, now, remember, on the run-up, we had a lot of calls. They crushed it. Now, If you go a little bit down, then people jump on the put side. If you go a little bit down, that's a tease. More puts will come in, and then they crush it up. Why? Market makers don't want to pay. They look at their why, and they'll sit somebody there, 50 grand for a name. These are electronic now; it's all computer. For a name and say goes about 2 cents of this number. That's a why there. That's an open interest. Yeah, 7,000 shares. Well, or 500,000, whatever it is. Go below this number, buy 500. 2,000 shares. Keep trying to adjust all the way through, especially the later part of Friday. When we go to American expiration, which is anytime before actual 415. So, and 402 in single stocks, 415 for ETFs. Now, the index they'll sell in the morning. That's European. That some people may play with the I would say ESU contract. What's really more efficient is the rolling open of the SPX, the open of 500 names, open of each, not the same pricing, not the same timeline, not the same. What is the value now? No. It's each open, they take it away. Until all 500 are done, that number becomes the index settlement. So if by delaying 1 or 2 in 500 names, you can. Some excuse, whatever, imbalance, news, they can delay that until they're where they want it. So is it shenanigan? You bet sure. The system will protect itself. It has to. It has to be in the business. So you and I go up there the next day and place an order. Okay, this is DT. I think this is worth noting. I don't usually go to this chart, but notice what yesterday Trans did. Remarkable, made a new high. I mean, Trans has not been that spot for a long time. This is several years. It did a new high. So keep that in mind. Okay. Again, discounted value of the future economy. Not technology necessarily when I say future. I'm talking about forward economy, 6 months, a year from now. So this says we're clearing up. We're gonna get better. How, I don't know. They didn't send me that email yet. Okay. When they do, I'll share it with you. Risk on, risk off. It was interesting and also positive. On a day that we have a strong down day on NASDAQ. So all other things being equal, that's another puzzling item there. Keep that in mind, okay? The D trenders are not anywhere wild, but as a matter of fact, we talked about that yesterday. Yeah, you can see from the historical value. But I like to see 7 years, and I don't think we're there yet. So SP1 and Momo, SP1 shot up, even though that was up. Okay, SPX closed lower, but Nasdaq was really down. So, but the SP1 Momo pulled up, went from like a half a sigma to 1 sigma plus. Okay, and its smaller and shorter brethren, Momo, also pulled up and it's positive now. Is it going to go into overbought? I don't know. I think it's a little bit early. I think this is a discussion for Monday, not for tomorrow. Tomorrow is going to be havoc because of a quarterly expiration anyway. So, no, not necessarily a directional day. There's a lot of ropes that people are going to be putting on either side, and that's the result of tomorrow. If you can avoid tomorrow trading, you should. Most likely I will, but let's see what kind of day we have. Maybe just trade the first hour, by the way. Thursdays have not been good to me. You've noticed that the last 2 Thursdays, so I gotta be careful today. SQ went back up. To me, the SQ mission is done. Mission accomplished. Nice signal. We know there's a pending problem. We're also in this early. Tomorrow also happens to be Rosh Hashanah, which is a Jewish high holidays. I think 57. I don't know, 55 here, whatever, I forget, but it's 57,700 plus. It's the New Year tomorrow, Rosh Hashanah. We welcome the New Year to our brothers of Jewish faith, and but remember they're going to be. It's a long 10 days, and are prohibitive to from doing any new transactions or any engagement in new activity. So what volume next week is going to be extremely low. That means volatility should be up, and the biases to the downside. So these boys have started early, thanks to Jay Powell, and we could be going into this. I talked about September 18th. Looks like Jay Powell decided to start on September 16th. I don't know why he didn't call me. He just sent us as a courtesy. We're schoolmates. At least an email. I think it was a year ahead of me. Yeah, I think it was a year ahead of me. Oh no, he was 2 years ahead of me. Yeah. So, just as a courtesy, I'm sure they get time and digest. They know my dates. Come on, give me a break. Anyhow, just kidding. We did fix this. This is the Z contract versus the 3-month spread on the VIX. We fixed the right spread. Value is more reasonable now. Yeah, when you get toward the expiration, the front month goes really nuts because of demand for it. But this is the right term structure. You can see from volume and you can see from price. Okay, and interpretation of this. Okay, now that we have, I think, second day under our belts as a V contract being lead. This is the October contract. VIX expires 3 or 4 days normally. Remember, CBOE leaves a lot of room for flexibility, but normally will expire on a Wednesday morning of the expiration with the last trade on Tuesday night. That's why there was no volume yesterday for the VXU20. So V is lead, so long V, short F21. That's January 21, and this is the resultant. And then we have to obviously do our single channel and modify that to accept the spread as an input rather than two individual names, okay, or two individual assets of the same class, obviously. But anyhow, the gap up we had has been taken out. Okay, you can see that. So this may be heading south, and Boeing bothers me here, so we'll see. I don't know if it's going up or down. Let me see. No, Boeing is down about 1.8%. Tesla is down 5. Yeah, 5.4. Microsoft 2, Apple 2, Amazon 2, Google 1.37, FB 1.77, of course Netflix 2.2. So they're up there. The SPY itself is down 1.5%. So how do I interpret this pattern? With a 2 negative rating, remember this is an adjusted scale because this year things have been so different. None of it makes sense. The levels make sense. In the past, when we hit the zero, when it came to zero, the low was in. I think we're shifting -4 out of this. So I gotta take a quote. Let it go. If things are more normal, we can put it back in. Assuming we put the 4 back in, that would be +2 right now. Okay? So yeah, we're gonna drop the bottoms down in. Once it hits 0, the low is in. And when we're high, it's negative, very negative. So we have to. I have to take a look at that. I did this adjustment back in March, May because that period where these numbers were so wild and the volatility itself was so compounded that we had to make a shift there in reading. So let me. I'll owe you one on this. I'll come back and see how things are by tomorrow or Monday. Maybe Monday. Have more time to analyze to see what that shift should be. But I just want you to be aware there is a shift there. Okay. All right. Stock RSI, which we don't usually talk about, but still stay. It pinned down, and that's understandable. We pulled back here on the SP2 because of this action up here. You have 2 outside bars. That's not good. And still, we cannot get at all over center line. Center line is being 20-day moving average is 3429. We can't go up there by say Monday. I think the slide has started. Even by tomorrow close, that slide will start to the downside. And then targets becomes 3,100. So what you need to do, well, you're gonna trade the futures with a flow of the order flow. But you're gonna on your bow off stocks, get rid of them. Anything four letter, look at it. Not get rid of it, but look at it. It's worth reviewing. Your four letter words need a lot of attention quick. If we can't get through that 34.20, because that's going to be a warning to you that, hey guys, we're going to drop 300 points faster than a rabbit gets pregnant. Sorry about the language, but that's a trade desk language. Okay. And so welcome to the new world. Exactly. Let's go to one chart we have that we use from a stock chart. We borrowed from a stock chart. I don't know why it's loading like this sometimes. I think it's a hit. It just in the morning, there's so much coming in. You see the code actually. This is a chart we want. No difference there in terms of price. I mean values. The chart is a chart. We're heading up. Notice what we're getting here. We're heading up. This is leading up actually. We're heading up. That means the number of a stock, the number of components of S&P 500, they're above 200-day moving average, are now 65.73. We're heading up. Of course, that lifts the moving averages along with it. Watch this separation. To understand the moving average, because it has a delay, remember, we're half cycle out of phase. So the MA, 20 MA is 10 days behind. Excuse me. 50-day MA is 25 days behind, okay? 10 and 25 is what the lag is. The best way to look at what this is supposed to do or wants to do is look at the separation between the two on the same day. As this separation widens, the move that you're in will prevail. Yeah, just natural, right? I don't need to explain that. You got. I'm sure all of you got it. If that separation shrinks, the reversal is coming. So the prevailing trend is done. You can see it. So right now, it looks like it was a head up. This is very positive for the market. It is. Okay. But it's very bumpy too. So as we say in Persian, with one bloom, you don't have a spring. Okay. You need many blooms. So given where we are, given where this is, given what's ahead of us, given what the SQ is telling us, hurricane season, elections, Jewish high holidays that start tomorrow and goes for 10 days. These have different biases that we have to deal with. And then, of course, don't forget COVID. We have also COVID. We're still 1,000 a day in death. Numbers are rising everywhere, and nobody wants to deal with science. That's the sad part. So, we put a man on the moon. It was all science. When we built the Atlas, that's what created Atlas rockets. We created, give the fuel to Fairchild semiconductors for managing the trajectory, especially the gimbals, the inertia, and also the fuel flow. You put that to the next level. 5 guys left. I believe it was 5 left, and my memory is not clear on that, but I think so. Went to create Intel, Bob Noyson, Gordon Moore, and so forth, and then the Gordon Moore rule came out. But you go back. These are the guys who changed our lives. Okay, given the audacious goal that Kennedy had. Now, I agree with his policies. I'm a Republican, but that audacious goal changed Silicon Valley, changed us. Look what we have now. So hopefully it will help us this time. But we need to get back to science, unfortunately. That's a big unknown. So we'll see. Keep calm and move forward and just be safe. That's what we have to do. Okay, let me go to the surprise for everybody. Okay, last night I was thinking from the comments of Armando. As you know, he's been with Morning Ken, how are you? With TradeStation Securities. I think at least TradeStation Technologies and maybe even Securities, which is the brokerage arm. I may have run into him too myself. The voice sounds familiar, and he lives down here and so forth. The other side, on the East Coast side of Florida. But anyhow, long story. I said, let me build what. No. I said, let me build what we talked about, which is I want to give you guys an IV chart there, okay? And that has to be a dot D, so there's a different animal. Volume is crucial. Volume is absolutely crucial. You see the U here. And this is the start. This is on 5 minutes. I run in 10 minutes here too, but you can use 5. 5 is fine. We have a 3 and 5 that we were talking about before, but I put a DMZ on one. I get rid of ES. Forget ES. It's going to be NQ. Let's just focus on one item. 3 minutes, 5 minutes. 3 minutes because this is ideal for DMZ. And DMZ diff, again, volume underneath. You got, on the 5 minute, I actually insert the ATR because we need to have that. I didn't want to put the ATR here because that's a dot D. It creates an avalanche of issues there, which I'm not going to get into right now. But you guys with background in DSP could appreciate that. That's digital signal processing. So we have to dump it here because this is number one to look at. So occasionally throughout the day, I will be looking at this with you guys. Okay, this is we're gonna take this out. Disable it. That's too far. That's MBS up that I took disable. Didn't take it off, disable it. That's this value. You know the value here. It's just that this is a different area and we're just shrinking it. We need to see that with clarity what's happening inside. So occasionally I'm going to go here just for you guys and for me. And I do have ATR over there on my screens too. But I will do it so you guys, those of you who want to keep an eye on what's going on, you can see where we are. This is a pretty good signal that they're selling the rallies. And until this rotates, there's no buy here. Okay, so again, IV levels, the failures are crucial. Levels are crucial. Remember, first hour dictates what this is. Once these two numbers are come on, this level and that level, nothing changes after that throughout the day. Then these lines are drawn automatically. As a matter of fact, the machine plots it this way. We had to. We came up with a way of doing this part. And then, as it plots, you can see where it's going. Look at the failure. Failure. Look, go back up. Oh, so double test. See the value? Another failure, and then wolf goes. And you can see this failure, and then now level. Now this is dot D, so there's no data from tonight. It's overnight trading. So it's good. Go a lot lower and start. We'll be around 10,000. Yeah, 11,000, correct. Because we're down to 60. There we go. All right. This change is a dot D change. Keep that in mind. Okay. So all this RTH, regular trading hours, 9:30 to 4:15 Eastern. Okay. It does not have 6 p.m. that you have here. Again, DMZ, green you're long, red you're short. In between, decision time. You're not supposed to cross the other side with this trade, and vice versa. This is crucial decision time in between. Thus, we've named it DMZ. I think the week we launched it, Guampino was meeting with his buddy Kim at the DMZ 38 panel, and so we said, hey, we're going to call it demilitarized zone. It fits the bill. More importantly, on the signal channels, you want to watch -1, -2. Our webinar was going back to 2005, and I discovered by total mistake, total chance, I should say. At the beach in California, too tired at night. I gotta get up early, and maybe it was too much coffee, maybe it was too much Cuban cigars. I had no idea. And it was the middle of my book. I'm trying to write the book. Edited 14, 13 chapters, plus the 3 chapters of my own. And get into Wiley, oldest publishing company, very tough, run by a bunch of lawyers. You do it their way, or they don't do it at all. Very simple. They don't need your money or your ideas. You need their name. That's the attitude. Fine, I'm trying to do that. This was left on overnight. I come in the morning, and it didn't make sense. I was tired, went to bed. Came in the morning, and I noticed this extra lines. I said, what the heck did you do? And it turned out I was drawing more lines than John Bollinger, who created the Bollinger Bands. Not Sigma channels, but Bollinger. Also, so I called him, took him out to lunch, and we decided, hey, I'm going to call this different. I'm not going to call it his. He says, you can call it Bollinger Bands, and then give me some credit. I said, Johnny, drink your scotch. Not going to do that. I'm going to go to Origin. He goes, what? I said, Sigma, standard deviation. Ottoman Empire started 400 years ago. You're a Frenchman. This is way before you were around. He laughed his head off, finished his drink, and he says, you're tough. I said, no. Let's give credit where it's due. So I think recently he has changed his mind. I've heard a couple of comments because I guess nobody thought I would be where I am. So, but that's okay. We'll have to try it. We have to push forward. It's a mentioned popularity was out there that he says now. Farry, you really need to call this Bollinger, man. I said, Johnny, should I send you a bottle of scotch? Yeah, drink, okay? Yeah, don't get involved with big things. I feel sorry for him. As one of the guys, technocrats said, it actually technical types, technical analysis. Other than Bollinger, he hasn't done anything. Now, I defer with that. I beg to defer with that. Read his book about volume. It's good. But they never got traction. His volume indicators are good. Never got traction, but conceptually it's good. A lot of times you build something great, nobody buys it. Keep that in mind. It stays in the warehouse. But and the other thing is that he's running a very small money management firm, about 30 mil. But he wants to keep it family. So it's got him, his wife. He had I forgot the name of the guy, Dan Fitzpatrick as an analyst there, and a Persian boy who came in as I say boy because he was a youngster, as an analyst, and he was terrible. He was absolutely terrible. So, but he had cooked for them some kebabs a couple of times. So he says, "You're my chef now." So now the analyst becomes a chef, and they have a barbecue in the backyard there because they live on the beach in Manhattan Beach. So at daytime he comes in, trades a couple of stocks for his own, goes and make kebab for these guys. I said, Jesus. Okay, Johnny, but I don't do manual labor, so I took him to the best places in Beverly Hills, and he would come in with his convertible Mustang, so and sunglasses. Well, something you don't see John Bollinger on CNBC like. Long story short. By the way, speaking of manual labor, I did make some lamb burgers, grass-fed lamb for Admiral Tico yesterday. Yeah, and that's because we were out of choices. Not that he would have done anything great yesterday. No, he didn't. But we're out of choices, so we had to settle for lamb burgers. All right. Having said that, what else do we have? I think we've covered everything. Murray, you want to talk about Excel Force? Yeah, Excel Plus. Excel Plus, I'm saying that. I almost said double X. Where is this? Hold on. Okay, let me come back here. There you go. Okay. This is the Excel Plus. This is what we're running. That's a little bit slow, but signals are pretty decent. And now we've taken the lows out, okay? But you could see the cycles there. This was a double buy there. I mean, the bullish divergence. Lower prices, much higher review, and it was a nice run. Failed at MBS. Again, combination of different technologies. Interpretation is key, but you could see how it leads. I traded a little bit last night here. I have no Tico account only. I was tired, and I was between my dietitian and the diet chef, and the two were having difference of opinion. I told him I'm going to listen to one of you. I worked on B2 Barber. It's called management. I cannot have two guys. No two chefs or no two dietitians. One each. You guys talk, decide. I eat. So. All right, this ends our presentation. It's 8:57. Let me stop the